Hello my friends, this is Ken here from Smart Forex Education. In today's session I just wanted to very quickly discuss and really talk about the importance of price action, just using clear, clean charts without any clutter, without any indicators. Basically, the situation is in the markets, especially for a new trader, there's so much information online that sometimes you get really consumed with trying to add 3, 4, 5 indicators, which what then happens is the indicators you have on your chart accounts for 75% of the data and only 25% price action. So we want to do the opposite here. We want to have a minimum of 75% price action and 25%, maximum 25% of indicators. But in this chart here we have a clean chart of 100% price action. Now a prime example of why having such a strategy that we have at Smart Forex Education, we can be able to take advantage on a regular basis and execute trades following our plan. And what we normally do here, we normally like to take advantage of traders, new traders that enter into the market, take advantage of traders that are trying to chase moves, and also entering trades as smart money. Okay, so I'm going to explain to you what that means. You can clearly see here, this is the Australian dollar versus the US dollar 1 hour chart. Now looking at price action, you can see a very, very tight range that has occurred here. And what I'm going to do, I'm just going to draw so we can see a range. So we have a resistance and a support line. And what tends to happen, a lot of traders are taught to enter trades based, the first area to enter trades based on a trend line resistance. Okay, now that's important, but I'm going to explain to you how to adapt this. Okay. Also, if you're not taught how to enter trades based on entering short on a trendline resistance or long on a trendline support, the other strategy or theory a lot of new traders will have is entering trades on a breakout. Now I'm sure you agree with me here. You've probably learned this information. You've actually traded using these strategies, or you're currently doing it right now. Now I'm going to explain to you why, by just looking at these two areas, either the entry setups, you could be entering trades on a regular basis and losing money. Now what we need to do, we need to change your mindset. We need to change so you can actually understand the location of where the smart money traders like myself, like my group of traders that I regularly teach and train, identify where we're actually entering the trades. And I'm going to show you. Now if you had entered on a entry just primarily based on the trendline resistance, it's fair to say you would have been knocked out of the trade, right? Dependent on your stop. But normally, a lot of traders would be looking at entering trades on this breakout here, okay? So as a short on this breakout, okay? Alternatively, entering a long. So let's say, for example, you're one of the individuals where you want to enter the trade based on a short off the trendline resistance. Well, one of the criteria that you need to have, you need to wait for the momentum to change. It's crucial not just to enter a trade because it's holding at the trendline resistance. What's the flow? Where's the money flow? What's the direction of the trade? Number one. Number two, what's the fundamental aims? Is this price being pushed up based on some form of economic data that's just come out? Is there some surprise news that come out into the market that's all of a sudden pushed the price? So you need to be aware of all this information before you even consider entering the trade here. Now my friend, this is so important, And this is the reason why a lot of new traders and traders that have been trading for quite a while continue to lose in the market. What my main aim is to do is to assist you and show you from a professional or successful standpoint what you need to do to change that. Okay, now taking that into consideration, if you're not one of those traders you want to enter based on the trend line, then you're going to be someone else that you want to enter on a breakout. Okay, I'm sure you're saying yes, yes, yes here right now. Now, if you're entering a trade on a breakout, it's all good and well. You would have entered a trade on a breakout, you would have been in sufficient profit, and the key now is, what's your target? Unfortunately, a lot of traders do not have targets. They'll basically be in the money, and then they're hoping and wishing that the market will continue to go up based on whatever analysis, will continue to go up, so they'll make their millions, let's just say. But as we all know, if you've been trading for a while now, you'll know that the price will test a certain level and then we'll get a flush. We've spoken about the flush trade quite a lot in previous sessions. And what we see here with the flush trade, we can see, or you can't clearly see right now on the chart, but once you do the course, what we do with the training sessions, you'll be able to identify that buyers are getting caught to the upside. Okay, and let me explain here. So buyers are caught to the upside in their trade. Okay, and what we will normally do, we'll normally counter that. We'll see that a price is broken just above the previous highs. That presents a nice opportunity of a short trade. Why? Because we know that there's going to be newbies or inexperienced traders entering to the upside, and if the market is not being pushed by long-term advantageous value, and what I mean by that is if there's not a lot of demand, long-term demand from the institutions, from the commercials, if they're not looking at entering the trades to long-term, then this is just a flush, basically pushing the price higher, sucking in buyers to buy at these highs, and then they're going the other way, and then hunting for stops. And this is exactly what we do. We look for the price to break out to new highs, suck in buyers that will enter looking for a long. Then if the price is not being followed by institutions and commercials, and we can tell, we'll look for a counter trend of a short. I'm going to explain this here. Entry short on the move to the downside. Basically hunting for stops. And what you'll see a lot of sell stop orders being triggered. Okay, does that make sense, guys? Is that clear right now? I hope so. So then what then happens, hunting for the stops, and then you get this continuation play. If the supply then continues to outweigh demand, you'll then get a strong follow through. So the key, what you need to do is identify the level of strength, and I'll show you how to in the next session, and then we'll have targets in place. So we'll look to, okay, so what we'll do here, we'll then see with the move to the downside, we'll look to set specific targets where we'll look to sell out of our lots. Okay, so if you're trading 4 lots, then we'll scale out the position. If you have a small account, then what we'll do is we'll then sell out the micro lots as the market continues to move in our favor. Okay, guys, be aware, keep a lookout on the market, make sure you have your stops in place, you have your target, and if you want to find out more, keep an eye out for the next session. If not, pop along to www.smartforexeducation.com and join my mentoring program, and I'll see you guys very shortly. Speak soon, my friends.